The reason why platforms are essential for advisors, in my opinion, is firstly around efficiency. With the increased regulatory burden on financial advisors, it's really important to be able to do things quickly. And the second piece is also being able to communicate all of the assets that a client has in a digestible way. And platforms do that very effectively. I think platforms have historically failed to meet advisors' needs, principally in not doing as expected or intended. They can promise the world, and then when it comes into practice, they then make mistakes, which then puts a lot of strain on financial advisors. There are lots of promising areas for platforms at the moment, and I probably don't even know half of them. I would say one of the areas that I'm really optimistic about is the connection between back office and front office. So I know that recently IntelliFlow and HubSpot have started an integration together so that they can connect the two, and anything that the industry can do to connect those two so that everything happens in one place, I'm all for it. I think it's difficult for me to answer how advisors can best future-proof their practice because I've never been an advisor. However, the normal things are saying we need to look to younger generations and use technology are going to be paramount. But you know what? I'm not going to go into detail on that one because I don't think I have the the insight to give it. The renewed interest in cash has come about, I would say, principally in two ways. Firstly, of course, is the interest. As we all know, interest rates have gone up significantly. The base rate 50x what it was only a few years ago, then rates themselves going 10x as well. So that's the obvious one. I think the second is the technology aspect. So we are now able to manage cash in a much easier way with platforms that are able to connect clients with underlying banks without having to do so much of the admin. And the third thing I'd mention as well is also because of the complexity of the cash market. I think sometimes we forget just how many players there are. There are hundreds of banks, so many different types of products. We talk about FSCS, we talk about notes accounts, we talk about fixed terms, but that's not super simple to everyone. So I think there's been a lot of change in the market, and that's why. So there's definitely been a big shift in the financial advice market when it comes to going about the process of managing or supporting clients with cash. I've been in the cash management industry for 8 years or so now. And certainly when I started out, it was a case of speaking to advisors and they would say, look, it's not possible for me to be able to support clients. The rates are too low. By the time I get involved, I'm taking away any benefit from them. So it's been left to clients. That has definitely shifted. The rates have gone up. Advisors are definitely getting more involved because they're able to add that value. And we recently did a survey of our advisor cohort to understand changes. And they've shown that now cash is a much more important part of the conversation. However, there's still a lot of work to do, I think, in uptake when it comes to technology and using cash deposit platforms to support those clients. There are a couple of risks when it comes to not or for overlooking cash in parts of your as part of your portfolio. We'll take this in two parts. So in the first hand, we have the clients. Now, for clients, the benefits are relatively simple. You're losing out on interest on your cash. So those are returns that's compounded over years are material. The second is around protection. We want to be able to diversify our cash across different banking institutions to make use of FSCS, as well as generally not having all your eggs in one basket is a good rule of thumb. And also because we want to reduce that administration that it takes with cash and if you do have multiple accounts. So I think it's clear for the client. I think on the advisory side of things is where it's particularly interesting. We know that roughly 20% of clients' portfolios on average are held in cash, which is a little higher than I think many advisors expect. And The thing is, and this goes back to the point I made previously around the complexity of the market, it is actually quite intimidating to interact with, and advisors can truly add value by supporting them with it. And on top of that, there are solutions to make it really easy to do so. There are a huge amount of things that can be done with integrations, but there are so many people doing so many different things that it's quite hard for everyone to see eye to eye. We recently held a banking forum last year, which brought in 50 banks, and this is something we were talking about specifically around how do we create a standard of API integrations so that it's easier for everyone. Now that's just an example. The point being is that there are many people doing many things, and unless we have certain standards, it can be quite difficult for everyone to see eye to eye, to repeat myself.